Hello, how are you all? Hope you're well. Here's the weekly market update. This is my second after that. It seems I've recorded the whole lot with the microphone turned off. So here we go. Yeah, so what's happening in the market out there? Well, I guess quite a lot again. And as I tend to do, I sort of split it in both, what's happening in the macro out there, what's happening out there in the outside world, and then what's happening within crypto. So, what's happening in the outside world? Well, of course, there's a lot of eyes now on the Fed. JP Jerome Powell is coming out later on today, which will give a lot of indication as to whether they're intending to reduce interest rates for the first time in what is it since July 23, I think. So over a year where they've maintained higher for longer. But it seems to be absolutely priced into the market now that they're going to reduce interest rate by 0.25%. What might be the surprise is maybe they go to 0.5%. Why would they do this? Well, all along their stated, reasoning for increasing them originally was, of course, to fight inflation. Inflation was up to officially 9.4%. There's unofficial reports there that said it was up as high as 18%. That would probably feel more closely to what it actually felt like to prices going up and all the rest. But now they have it down to, again, their own stated number of 2.9%, which is still nearly 50% over their actual target of 2%. So obviously they want to keep it as high for long as possible to ensure that they actually get down to their 2% and that we don't see a rebound into higher inflation again. But the other thing that they were keeping a close eye on was jobs. And the reason they said they were able to keep it higher for longer, the main one was that their economy was still strong. Jobs were strong based on the reports that they were using, that the job markets was all good. I've put out a number of videos along the way where I've shown that the public jobs report that we all hear and see about, that apparently shows the economy was really strong, later gets revised in a not so public way, showing actually the numbers weren't quite as good as they are. Well, now there's an official report coming out for the 12 months. And apparently, it's stating that the jobs market was overstated by 818,000. That's nearly a third of the 2.9 million jobs they say were created during the year. So this is a massive difference, and now it doesn't back up what they've been telling us all along, that the jobs market is good and the economy is good. This puts a huge dent in that storyline. So now does that open up the door for the Fed to not just reduce interest rates by 0.25%, but actually reduce it by maybe a 0.5%? It seems that the market has baked in a 0.25%. If it were to go 0.5, that certainly would have a very positive effect for risk on assets like the S&P and like crypto and so on. But will they do that? I think they still have this huge fear about inflation ticking back up. And so they may be reluctant to actually reduce it by any more than 0.25%. If they didn't reduce at all, then I think this would be a real shock to the market. I think we would see a significant pullback in the S&P in general. However, what does rising or reducing interest rates mean? It means there's a problem in the economy. And so will this have, I think, while I'll have a short-term positive, long-term, it's telling the world there's issues in the economy. We have to reduce rates in order to try and deal with that. And so it may not be the massive positive that a lot of people have it put down for in the overall macro environment. On top of that, there's plenty other things to be concerned about in the economy, as I've stated, on a number of occasions over the last couple of months, and certainly in the recent market updates. But if you look at this chart as an example, this is a chart on zombie companies. A zombie company is defined as a company that has to borrow money to pay back the interest on money they've already borrowed. Not paying back the capital of the loan they've already borrowed, but the interest. So they have to borrow to pay the interest of previous loans, meaning they're going to have even bigger loans with more interest. You know where that goes. The point here is look at the direction this has been heading. Back in 2000, about 1 in 30 companies were zombie companies. Now it's 1 in 5. Imagine if that sort of number of companies start going into bankruptcy, or even a percentage of them. This will have a massive negative effect on employment, which in turn has an effect on retail sales, which of course has a huge direct impact in the overall economy. This, of course, will have directly impact, the stock market and other things. So there's plenty warning signals out there on the overall macro environment. On top of this, of course, if you have uh, people losing their jobs, um, companies struggling, of course, this is going to have a direct effect on um, home ownership. And home ownership, you can see here, the median over the last, going back to 1900s, has been in around, let's say, this 100 mark. It's currently over 200. That suggests that house prices would have to drop by 50% just to come back to the mean. Look where it was in 2009, the previous peak. We're higher than that. And we know what happened after that. So it's highly likely that it's going to be a very strong correction in the overall retail home ownership market, not to mention what's happening in the commercial real estate market. So there's huge amount of warning signs in the overall economy, and some believe that we're actually already in a recession in the US. But it certainly seems that at some point of time, this is going to have to come home to roost and will affect risk on assets. The big question is, what are they going to do between here and the elections in order to keep people positive? Because the incumbents, the Biden administration with Kamala Harris coming in behind them, they're going to want to show a positive economy and positive numbers in order to have people positive when they're going to the polls. Otherwise, they may vote to the other side. So there's huge pressure on them now to have positive figures on there. What are they going to do to make that happen? Well, we know what normally happens. You reduce interest rates and then you turn on the money printers. So while the interest rates that are likely to start reducing, I don't see that having a massive positive effect on crypto in the short term. Maybe a few blips here and there, but I don't think it's going to give it the energy to get above all-time highs that we've seen. And we'll have a look at that chart in a minute. So what else have we got? So as well as all of that, right? If you look at the S&P, usually prior to every bubble, the amount of the overall S&P consolidates into just a few companies just prior to big pullbacks. Well, if you look at the S&P right now, the top five companies, those being Alphabet, which is Google, you have Amazon, Nvidia, Microsoft, Apple, they their market cap is 29% of the overall S&P of 500 companies. So five companies of 500 companies have 29% of that. If you go back to the dot-com bubble, which obviously was a bubble and it crashed, at that time, there was five companies, the five strongest companies, had 18%. So we're gone from 18% to 29%. The last time we had a massive crash, will that repeat? We'll see. Again, there's lots of factors out there that would suggest that there's issues. If you look at overall debt in some of the biggest countries in the world, including the US, their total debt, so their national, private, and corporate debt, it would take 3.5 years on average across the biggest countries in the world. Their full output of GDP would take 3.5 years to pay back their debt. And of course, that can't happen because they have all the other costs of running a country. So there's huge debt there, both in countries, in individuals. Credit card debt is an all-time high in the US. Delinquencies and bankruptcies are growing rapidly. We have a huge amount of zombie companies. We have retail home ownership, way overpriced now and way outside the mean, and even higher than it was before the property crash of 08, 09. So there's definitely many warning signs out there. So where's the good news? Well, within crypto, there's an awful lot of good news. As usual, the setup for crypto over the last many months has been incredible. Again, banks, institutions, some of the wealthiest people in the world, all now talking positively about Bitcoin. There's ETFs coming out left, right, and center for Ethereum and Bitcoin, and even Solana in Brazil. So there's an awful lot happening. And a lot to be positive about. And if you look at the likes of MetaMask now, they're going to make it easier for people because they're bringing out their own debit card. So easier for people to convert and be able to spend their money from crypto into fiat. On top of that, you have Apple, who are now opening up their Apple Pay, and then going to allow people to be able to build on top of that. So what that can eventually mean, now it's not going to happen today or tomorrow, but now it has opened the door for people to build on it and allow people to be able to spend USDC straight through their card. So now if you're in crypto, the big, I suppose, problem was crypto is faster and cheaper and has been for a long time over not any normal banking scenarios. But now it's going to be easier as well. And fast, cheap, and easy, that brings on mass adoption. So there's going to be huge numbers coming into crypto. And we can see that already happening. If you look at the monthly active addresses across crypto in general, you can see very gradual growth from 16, 17, 18, 19, 20 up to 21, gradually increasing in speed. But now, if you look since the start of 2024, you can see that it's more than doubled from where it was, and just around the 20 million mark to now over 50 million. So the people are coming to crypto. The addresses are being created. There's a lot of people out there understand and know that this is the place to be. But it still is too difficult for the average person to come in and really take advantage. It's getting easier, and retail are coming, and I think the upside is on its way. So, what's this chart? So this chart shows the Dixie. The Dixie measures the US dollar strength against a basket of other major cryptocurrencies. Why are we looking at this? Well, traditionally, we'll have seen here that every time the Dixie, in other words, the dollar value starts to reduce or weaken, which we can see in the first chart up here, every time you see that red arrow going down here, what happens to the Bitcoin chart on the bottom? It goes up just as strongly. Again, you can see here, back in the 2020 to 21, we can see huge decrease or weakening of the dollar. Again, huge increase in the strength of Bitcoin. Again, for the third time, we see a reducing and an increase in Bitcoin, though not quite as steep. So why is that important? Well, if you look at this, we can see the Dixie is just starting to break out of a zone, a really important and strong zone that has been there for for quite a long time. You can see that it's just breaking to the downside. In other words, the dollar is weakening. If this truly breaks out of this zone and starts to reduce significantly, that's usually a very positive sign for Bitcoin and crypto in general. What else is happening? Well, the M2 money supply is also breaking above a trend line. And of course, with more money supply, there's more opportunity for people to go on to risk on assets. So what tends to happen is when the dollar weakens, people move to risk on assets. With more money supply, there's more money for people, more dry powder for people to actually do that. And of course, that is very beneficial to crypto in general. So where to from here? Well, one thing I touched on a previous video is, of course, the Bitcoin halving, it goes every 4 years and it goes in cycles. And it seems to have a very, after a Bitcoin halving, it usually is a very positive effect on crypto. So a lot of people are going, okay, we've had the Bitcoin halving a few months ago. Where's this bull market? Why haven't we taken off? Well, maybe we can see some signs in the elections, the US elections. If you look at the elections here, going back to when Obama was elected, if you look at just prior to that, the all-time high prior to that, and you go straight across, it pretty much marries up when the elections were done, when the elections were, had the elections and then they come into power. You can see that just after that, it increases beyond its previous all-time high and really goes for it. If you look at the next elections, again, you look at the previous all-time high before the elections, you look when the elections happen, and look what happens after that. It takes off. Now, here we are, we're coming into the elections. But you'll note in both of these cases, there might have been a little bit of growth beforehand, but that huge growth. Well, we've seen, again, where we have this sideways action now coming into these elections. Are we going to start seeing an uptick just coming into the elections and very much a takeoff afterwards? Well, if it's to follow what's happened in history, then that would suggest it would. And if we look here, last chart, if we look at what happens Bitcoin in each one of these occasions, you'll see, right, where the big red arrow is, where the elections were in each one of these cycles. So, for example, the blue line is 2014 to 2017. You can see, obviously, the blue line here, it started at $176. And you can see how much it climbed all the way through. So it goes sideways for quite a while. You can see here at the red arrow where on the and the blue line, you can see it takes off just after the elections, and it takes off massively. Likewise, in 2018 to 2021, its bottom was 3,185. And again, you can see just prior to the elections, it starts to move, and after elections, it really takes off. So where are we on this cycle? Well, you can see from 22 here to 25, the black line, we are just coming up to where that election point is coming again. Do we see a little bit more sideways action, and then we take off from here? And again, bear in mind, the more sideways action you have before a move, the bigger the move tends to be. So you can see in the blue line, it was very casual the whole way along until we got to here, and then it absolutely took off rapidly. In the orange or the yellow line, you can see it was sideways for a while. It had a good takeoff. It took off prior to elections, and then it really ripped. So are we going to see the same again? Maybe so. So what does that tell us, or where are we from here? Here's what I think. I think we see some sideways action continue. I think the fact that the interest rates are likely to reduce is already priced in, unless they go for bigger than 0.25%. I don't think that'll have a huge positive effect on crypto in general. I think the stock market will just continue bulling out from here for now. But I think we'll start to see real major cracks in the economy. I think the Fed will start to admit that and take decisive action. And its decisive action is reducing interest rates on a continuum and possibly by bigger numbers. But I don't see crypto really taking off until the money printers come on. And I think there is no question that the money printers are going to come. And when they come, I think we see crypto move. And I think that's what's going to give it the energy to break above this sideways action that we've seen for nearly 6 months now. So is now a good time to be starting to look to buy into Bitcoin or others? Well, let's have one last look at one last slide. I just looked at what effect. So we know where Bitcoin's been. It's been sideways for the last 6 months. So where have altcoins? So AI has been the darling of crypto and this S&P in general. Where has it been since the start of April? You can see many different AI projects here. They've all been a downward trend. The question is, are they good value now? And likewise for real world assets, decentralized finance, so many different areas of crypto. They're all heavily reduced from all-time highs. And while Bitcoin goes in this sideways action, they continue to, in general, move down. So the question is, should you be buying now? Should you be dollar cost averaging in to somebody's good, well-researched projects in advance of Bitcoin making its move? Potentially. Do I see that happening in the next week or two? No, I don't. But it might be time to start getting prepared. So with that, hopefully you found that useful. We're certainly going to do a couple more videos on other projects that we think people should at least be having a look at. So watch the space. Plenty more to come from WoW over the next couple of weeks. So stay tuned, stay connected to the Telegram group, and we'll talk to you all very soon.